hour. So let's do this. Greetings and welcome to Top in Business. My name is Laban Onserio, coming to you live from the Kenyatta International Convention Center, where we are having the launch of the Capital Markets Authority's strategic plan that we're going to move the authority's vision for the next 5 years, that's 2018 to 2023. We have an exciting program. Of course, we'll be coming to you live on Top in Business, and we'll have NTV Today, of course, coming to you from this location, and also our 1 p.m. news. But before we get into the gist of the program, as we are, of course, awaiting the arrival of President Uhuru Kenyatta, allow me to just quickly welcome the audience that, of course, is comprised of the CMA's Board of Management and various stakeholders in the capital markets, to please give yourselves a round of applause for making time to be with us here today. From the audience, I also have an eminent team of panelists right up on stage. Beginning with my far left, allow me to introduce Paul Muthaura, who's the CEO of the Capital Markets Authority. Let's give him a round of applause. Next to him is Einstein Kihanda, who's the chairman of the Fund Managers Association of Kenya. Thank you. And right next to me, on my left, is Paul Mwai, who's the chairman of the Kenya Association of Stockbrokers and Investment Banks. That's CASIP. Thank you for being here. So the idea of this quick panel is just to set the stage and really set the tone for the day. Of course, we'll be hearing a lot from the government side and getting the whole vision of the Big Four agenda and seeing how the private sector can be able to plug into this. And what you see CMA doing is basically a word that has always been used around corporate circles, which is all about aligning to the entire vision of the country. And to just talk about, alignment and talk about the CMA's role in plugging into the Big Four agenda, allow me to just begin with Paul Muthaura to just quickly just set the stage into how CMA hopes to play out in these 4 pillars that the President outlined, and what to expect from you in the next 5 years.
Thank you so much, Laban, and it really is a pleasure to have everyone here today. It is a real milestone event for us today, launching our strategic plan for the period July 2018 through to June 2023. And fundamentally, in designing and structuring this strategic plan, the board of the authority was very focused on making sure that we're very well aligned, as you put it, to the key national agendas and priorities around development. Of course, there's the Vision 2030. Drawing out of the Vision 2030, there's the MTP3, or Medium-Term Plan 3 program. And then with the Jubilee government, we have the Big Four agenda, which is looking at 4 key sectors that they believe will have the most catalytic effect on transforming Kenya into that upper middle income jurisdiction that we all aspire to under the Vision 2030. Now, within the Big Four agenda, you have 4 key pillars around affordable housing, healthcare for all, manufacturing, and then of course, food security. Now, when you look at the role of the capital markets, and as we'll go through in our discussions today, we have identified key tools, products, and strategies through which we'll be able to plug into each one of those 4 key agendas. But for this purpose, if I can just focus on housing for a case. When you look at the current onboarding or production of housing in the country, we're averaging about 50,000 a year, which falls very far short of the 100 to 150,000 units that we expect in any given year. That has resulted in a current shortfall of more than 2 million homes. Now, in order to compensate for that and really support the government's agenda around structuring affordable housing for all, we're looking at a number of key products cutting across traditional bonds, for example, by National Housing Corporation, being able to come to the market. But now with additional strategies, for example, the National Treasury, establishing the Kenya Mortgage Finance Company, we'll start being able to have mortgage refinancing bonds also being issued. We've been working with our industry, and I think we're very honored to have just key speakers from our industry joining us here today, to look at how we can also operationalize and roll out real estate investment trust products that will have that critical role of not only supporting development, but also once these units are developed, being able to roll them into income-generating properties through income REITs. So this is one of a number of key tools that we see being able to play a role in supporting the Big Four agenda.
Thank you, Paul. And just also to get from the side of Einstein and truly see how, of course, this overall agenda plays in, President Uhuru Kenyatta signed into law the Nairobi International Finance Bill. That's in 2017 now. The authority has been tasked now with the establishment of a coordinated framework, that is, looking towards International Financial Center and also looking towards completing the existence of the domestic financing system, ideally, basically to fund the overall vision of the country. So in your view, while this is an industry-wide initiative, the authority has a key role in the formation of this process. So what is your view about the authority's main role in this, and how can this be implemented?
I think it's important in terms of the strategic plan to, the whole idea of the International Financial Center is really about and making it easier for international investors to come into our market. I mean, because we need to realize that we are competing with other markets around the region and also across the world. And so it's all about ensuring that there's a framework in place to ensure that it is easy for investors to come into the market. And just to give in terms of background, what I find very comforting is also the fact that in terms of preparing the strategic plan, there's also been a lot of input from players in the financial services, especially like ourselves, in terms of understanding what are the issues and obstacles that make it harder for investors to issue products. And for instance, if you look at the targets that are also in the plan, they are also very ambitious targets as to where, for instance, we expect the collective investment schemes to be in terms of value by the end of 2023. And that for us is very ambitious, and I think it's in line with ensuring that we're able to mobilize capital. So there are quite a number of initiatives that have already been mentioned. For instance, green bonds. There's also looking at ensuring that it is easier, for instance, when it comes to economic, social governance framework for issuers coming into the market. And this is important because it gives confidence to investors that they're going to invest in products that have already passed through a very robust mechanism to ensure that investor interests are protected and that there's credibility in terms of the issuers that come into the market. So what we see is encapsulated in this strategic plan is to making Nairobi a very competitive market and making it competitive compared to other markets across the region.
And Paul, just before we get to you, I should mention that we actually have a clip that will set the stage, kind of set the scene for us all to see how this whole project ties in and the next 5 years looks, especially in the sector. Before we play that clip, Mike, quickly, Paul, from your side, it'll be just talking about the agricultural and mining commodities ecosystem. If you could just give an overview of that and really how we can actually look towards how effective it is and how we can also be able to create opportunities for both agricultural and non-agricultural commodity prices on that.
Thank you, Laban. Allow me first to congratulate the Capital Markets Authority Board and Management on the launch of their strategic plan and to pledge the support of the investment banking and stockbroking fraternity to support in the implementation of this plan. In terms of the commodities market, we are excited that this has now become under the armpit of the Capital Markets Authority, and it is part of their strategic plan going forward. For a long time, it's perhaps been something that we've talked about, but haven't had the opportunity to realize. The clear advantages is that commodities market will allow price discovery and will allow the development of efficient markets. Efficient markets would mean better information for farmers who are producing the commodities or for the miners, and that will will effectively do what we call closing the arbitrage gap, because the arbitrage gap is where middlemen play, and that's where they make profits, sometimes to the extent at the expense of the key producer who is perhaps the one driving the growth in the economy. So we are very excited. We are also looking at the development of warehouse receipts. This will provide farmers with the opportunity to have a receipt that they can take to the bank and perhaps borrow against it, enabling them not to have to sell just to finance their day-to-day needs. They can time their sales or whatever. But what's more exciting for us is that from the spot you then move to the derivatives. A derivative market is actually a very important tool in transferring risk from those who don't want the risk to those who want the risk. And effectively what that would do is that with a derivatives market of the spot commodity, a farmer will be able to sell his crop, which he expects to harvest in 3 months or 6 months' time, at a price predetermined. He will therefore be able to determine his price and effectively hedge away the risk of the fluctuation in the price of the commodities. So I think this is critical to empower the farmer and to empower the growth in terms of enhancing our food security.
All right. Thank you very much, ladies and gentlemen. Please appreciate my panelists for that first round of questionings. So at this point, as I promised, we have a clip that will just give you a sneak preview into what we have lined up for you. So ladies and gentlemen, please turn your attentions to your screens.
The Capital Markets Authority new strategic plan 2018-2023 coincides very neatly with the renewed term of His Excellency the President and the Jubilee National Government. And in that regard, in developing the strategic plan, we took careful note of the President's Big Four agenda of affordable housing, universal healthcare, manufacturing, and food security. In looking at each of those agenda items, we can see that the capital markets in Kenya can play a key role in enabling the implementation of the Big Four agenda. We can provide both the raising of finance, but also the facilitative environment, whether it is the commodities exchange or the real estate investment trust, among others.
One of the most critical considerations of the board in reviewing and developing this strategic plan was to make sure that it was very well aligned to the key national development agendas that are operating in the country. We've actually scoped out all the key areas that we think the capital markets may serve to have a very significant impact in the delivery and implementation of that Big Four agenda. Now, without doubt, it is very strongly aligned to the Vision 2030, and in fact, it has been adopted as a flagship project under the Medium-Term Plan 3. The board was very pleased to note that, having been a flagship project with the implementation of the 10-year Capital Markets Master Plan within the MTP2, that has then also been carried over into MTP3, also recognizing at national level the critical importance that the government is seeing of the capital markets in supporting long-term economic transformation and socioeconomic development. What's significant for us is this is our 5th strategic planning cycle, and it really builds on a very strong journey the authority has had on setting down very clear performance delivery objectives and consistently measuring ourselves against those targets to make sure that we're actually able to effectively impact the intended growth and deepening of the capital markets in Kenya.
Initially, in the 1990s, 2000, investors were looking at capital markets products as assets, where you just buy your shares and go and keep them. The current investors are very different. They are looking at capital markets as a vehicle, where you go, buy, sell, so that you are focusing more on the turnover as opposed to just buying a security and going.
The board really has implemented or identified 6 core strategic objectives that are going to guide the direction we're going to be moving in. Those adopt, I think, a number of broadly areas that are very consistent with what has already been in place in terms of targeting key deliverables on putting in place an appropriate legal, policy, and regulatory environment for the market, as well as looking at areas like market infrastructure and the quality of market infrastructure we have in terms of attracting the right scope of both issuers and investors to our market.
Another key area that we are looking at that's different in this strategic plan 2018-2023 is on the strategic influence. We realize that we have made quite some positive steps in influencing policy, especially international policy, through membership in institutions such as the International Organization of Securities Commission. But we want to start doing that at home. We are now moving from being a frontier market to an emerging market. The difference between a frontier market and an emerging market is that once you attain an emerging market status, there's a lot of capital inflow that we'll be able to attract, because effectively it is said that almost $1 trillion US dollars is there waiting for countries that have achieved the status of an emerging market.
So digital financial supervision by the regulator through the application of the likes of SupTech and RegTech would help to computerize operational procedures and have more streamlined real-time monitoring and oversight over our licensed entities.
Our approach, first of all, is to focus on fintech that is directly related to the capital market. And in doing so, we are going to apply the regulatory sandbox model. In this model, we are going to have innovators in the fintech space, but specifically on the capital market, getting into some kind of regulatory space whereby we are going to allow them to test their innovation with very limited or less onerous regulatory requirements.
When we talk about infrastructure, we are talking about a whole system that starts from where the investors who have interest in securities are sitting to the market, if they are getting in, but if they want to get out, how then they go to the market, the process of them getting back their value. We also talk about investor protection. How do we make sure that the people who are transacting within the capital markets are well protected, and therefore no one is taking advantage of someone else because of the advantages they have?
I think as we look at the way forward, at the core of this, we remain very conscious that as an authority, our greatest asset is our people.
We want to ensure that even as we go into the next 5 years of our working, we have a team that understands and believes in and actually practices creativity, innovation, and transformation in the way we work. Uwezo Kipeo has been very key and is a focal point for us in ensuring that we move from a process perspective to focusing more on an outcome-based perspective.
There's a fundamental focus within the strategic plan on making sure that we're building the right team with the right skills and with the right kind of environment for them to be able to really perform to the levels that are going to be necessary for Kenya to be able to achieve the goals in the 10-year capital markets master plan.
Thank you very much. Of course, that is just the overall view, and I really want to appreciate the board, right from the chairman and to the team that is also behind the CEO. So ladies and gentlemen, one more time, let's give a round of applause to the CMA team. for that and wishing them the best even as they chart the way forward. Allow me to shift gears and just move away from CMA and of course from the panelists on stage. I'll come to you for the closing remarks. But really quickly, most of the people you actually saw in that clip, some of them are well represented at this audience and of course various stakeholders in the private sector. But allow me to just get a quick intervention. We have a roving mic. To begin with, I'm going to ask Madam Helen Karaoke, who's the CEO of the Unclaimed Financial Asset Authority, just give a view into how, she fits into the overall goal. After which, I'm going to hear from the manufacturing sector. That's from Pradeep Parana, from ARM, sorry. And then after which, I can hear from Madam Rose and Jeff to close up on that. So please stand, Madam. And how are you plugging into the overall vision?
First, I'd like to thank CMA and congratulate them for a very well done strategic plan. And when I look at it, it's very exciting. Their first strategic focus is on a facilitative and responsive regulatory framework, and it's all geared towards improving the investor experience. For us, the investor experience is very important because when we look at the shares that we hold, it's all part of that investor experience. And for us, we would like to tap into ways that we can partner with the Capital Markets Authority to ensure that the unclaimed financial assets mandate is well carried out. And that just drives into the strategic alliances. We do have an MOU with the Capital Markets Authority, and that will really, really sort of link those two things together. Over and above that, they have a strategic focus on technology, and we'll be looking at the operational efficiencies as well, and how we can just get synergies around that. Thank you, and well done for a great strategic plan.
Thank you, Madam Helen. Appreciate it. Pradeep, manufacturing is also a big four, and you're a key player in this, so over to you for your input.
Thank you. Congratulations to the CMA and a strategic plan which essentially enables the Kenyan capital markets to channel long-term funds for the manufacturing sector and the Big Four agenda. What we really need in this market is the long-term funding available for our housing projects. In most developed markets, the biggest wealth in the country is a real estate. If we are able to channel through the capital markets a program that enables real estate developers, housing owners to raise mortgage-backed securities listing on the stock market, that will boost manufacturing sector tremendously, because the linkages between infrastructure, between housing and manufacturing is intimately connected. So I'm looking forward to this exciting development. I think this would be a great news for manufacturing and all other sectors of the economy. Thank you.
Thank you, Pradeep. Before we come to Madam Rose, I don't know if Jeremy, you want to give an input on behalf of the banking sector. You're a key player also in the financial space. I saw also Madam Nassim in the house, but you can represent the entire team of bankers here.
Yeah. Firstly, congratulations also to the CMA, the board and management. For the financial sector, it's imperative that we have broad and deep financial markets for multiple reasons. For our corporates, it's imperative that they have different ways of raising financing rather than just relying on bank loans or bank debt overdrafts. Yeah. So obviously we've seen and we assist many of our clients to raise debt, and that's typically been the form that we have looked at. But then also we want to be able to see growth in the secondary markets, trading of that debt so that people can move in and out of those markets, because in many instances you've got foreign investors who are also interested in funding businesses, but they're also quite concerned about how they are able to enter and be able to leave to get the returns that they need for their own investors. So we're very keen, and I know the strategic plan addresses the development of secondary markets. I think the other aspect which I think is exciting is the aspect of risk management solutions. We've seen there the development of derivative products, forwards, futures, swaps. These are all essential for businesses to manage risk, over the different risk and time horizons. So the fact that we now start having frameworks and mechanisms to be able to give those solutions to customers, I think is important. I think lastly, obviously, as we see our own homegrown entities, SMEs become bigger and bigger companies, we would obviously want to see them listing. And that is important because as they list and grow, and we just need to look at Safaricom as an example, it allows Kenyans to invest in shares in those companies and diversifies out the savings base and the investment base to give people different avenues of return. So for us, as the banking sector, we're a very key partner to the CMA, to the NSE. We are here to provide whatever support we can and encourage our customers to take advantage of the many opportunities and the many development areas within the strategic plan. Thank you.
Thank you, Jeff. Sorry, Jeremy, I wanted to also get that challenge, especially to you, Jeff, especially on how CMS can come in to that. But before we get to hear from Geoffrey Odundo, Madam Rose, yours is on the impact of technology and adoption of the capital markets. And yes, if you could please stand and then progress on.
Good morning and thank you. I'd also like to echo the congratulations to CMA. When I reflect back on the journey that we've traveled together from the time that we thought or started on the automation process of the market. At the time, we were simply thinking of moving from manual transactions into an automated environment. And I think the last 15 years have been heavily focused on just making sure that we continuously eliminate risks associated with manual transactions. I think going forward, I'm happy to see that there's a key pillar within the strategy that's focusing on IT and technology advancements. When you think about developments across the globe, people are talking about big data as the next oil, actually. And it's key that we actually focus on how big data can help us move our services to the next level. And a prime example of that actually has been the Emma Keeper product, really seeing how can we enable a larger number of Kenyans participate in the stock market. We've got developments in artificial intelligence and robotics still moving further along the chain of eliminating manual intervention in every process of the transaction. And these kind of developments are what can help us move towards shortening transaction cycles and making them more efficient so that we're able to increase turnover and increase access to the market for a larger number of people. We are also talking about blockchain technology, the significance of the immutable record within capital markets transactions. What's the impact of blockchain technology on our operations? How can we leverage that to ensure that our records are actually the final record and they are immutable records, and thereby eliminating elements of fraud or hacking and that sort of thing. So I think I'm very excited about the proposals within the strategic plan about IT and the IT focus. And I just want to say that as CDSC, we are actually aligned in our thinking with CMA and the rest of the industry towards leveraging on technology to ensure that we are able to move our market to the next level.
Thank you, Rose. And Jeff, over to you just for, how can we have more companies listing and, of course, adoption of technology at the NSE?
Thank you very much, and I also want to add my voice and congratulate Paul and board and for this launch of the strategic plan. I think for us, what stands out is really how we've been able now to make a paradigm shift from a market where we were trying to automate and increase trading volumes to creating a market that's going to be an alternative funding channel. And hence, when you look at the various key strategic imperatives, I think the one that stands out is how we've been able to map the strategy to the Big Four agenda, and specifically the objectives that we can achieve under those Big Four on food security, on manufacturing, healthcare, and housing. And we have been able to develop products on each of those key pillars that can actually deliver and support the government achieve those programs. The second thing that I think we see that's going to be helpful is that now we are moving away from just listings, but focusing on uptake. Now, uptake on both sides, on the issuer side and also on the investor side. And very deliberately between us and the CMA, we are working on programs towards ensuring that initiative is achieved. The third and a very critical one is around public awareness, and not just doing this in form of the normal traditional way, but using technology as a lever to educate the public. Rose has talked about Emakiba, which for the very first time, over 300,000 Kenyans now know what a bond is, and it's not just a police bond. So that alone was a very key success for Emakiba. And finally, around technology, I think that's the directions the markets are taking. How will we then leverage on the new technology that's coming in terms of providing financial access, in terms of reaching out and education. So I think from the NSC side, we are very aligned to what the CMA wants to achieve, because it's also what we are looking at going forward. So once again, congratulations, and we look at supporting you further.
Thank you very much, and thank you to everyone again who gave their input in this intervention. Let's give them a round of applause. I would want to actually pass the mic around. I saw Madam Boy in the house, so Polika Pigatha as well. Bo Karina is right here. I would want to make this a very engaging session, but really quickly, because we have to break out on top in business, allow me to just get a closing remark. You've seen, well, the stakeholders in the sector are aligned, and from your view, you also represent, I know your seat, especially for Paul and Einstein, you represent many other stakeholders in the industry. So before I come to you, Paul, just for the quick wrap-up, allow me to start with Paul. Just really briefly, what stands out for you, and as your closing remark, what would be your key takeaway, even as we chart the way forward for the next 5 years?
Thank you, Laban, once again. And for me, the most exciting part of this is the push towards moving Kenya into an emerging market. When we look at those who have achieved emerging market status in the past, there are certain critical things that have resulted in them achieving that. One critical thing has been they have developed a very significant local investor base. And that's one thing that we need to work on. And perhaps the two key things that would be emphasized on this is, one is investor education and investing the Kenyan public on the importance of the capital markets. And number two is to leverage on technology to expand our reach in terms of building that local investor base. The second thing is investors' speed, the efficiency of going into market and getting money. When an investor comes to you and tells you he wants to raise money, he wants that money yesterday. So you need to be able to give him good time frames. And that has been a critical factor in those markets that have made it. And we probably need to adapt that and look at how we can benchmark ourselves, both by building capacity from the service providers and from others, in terms of how we can shorten the period from when the investor says he wants to raise money from the capital markets to when he receives his check.
All right. So, Einstein, over to you on behalf of fund managers, your key takeaways for today.
I think building on what Paul has spoken about, the key objective and the goal of the CMA in terms of achieving recognition in the MSCI Emerging Markets Index, I think for us that brings in quite a number of pillars, and I think it's joining one of the 23 economies that are within that index means that there will be a lot of significant development on various areas. One, I think, is in terms of product development, because as fund managers, what we are really looking at, we represent the investors who are looking to invest in these capital markets. And one of the things that we don't have and we continue to struggle on is really about the product, availability of products to invest in. And therefore that provides, when you look at the strategic plan, there are quite a number of objectives listed there that look at developing these products. And I think that's very important for us because it helps us in terms of being able to offer our clients a wider variety of investment opportunities. especially in the domestic market, because we've seen that a lot of the investment that we are seeing in the capital market is there's significant foreign investor participation, but I think it's also creating an environment to make it easier for domestic investors to invest, and these are the investors that we represent. So for us, it is a very ambitious plan, and we commit to be supporting the Capital Markets Authority in achieving it.
Great. Yeah. Paul, you're a host today, and all eyes on you, so what shall we expect?
Very much linking the points raised by Paul and Einstein is really at the foundation, cutting across all the strategic objectives of the plan, is the focus on how do we improve what we're calling the user experience. And user experience for us here is cutting across the issuers so that we can introduce the product that's necessary, the investors who are going to take up that product, but critically also the intermediaries. All the nuts and bolts and the plumbing of our system. How do we make sure that all are working and all are really having the most positive and constructive experience of being a component of the capital markets so that we can deliver the economic transformation we're looking at, that we can start raising the kind of financing that's going to be necessary to move the nation to the next level, but also to make sure that we're able to plug into our role in ensuring Nairobi emerges as a truly competitive global international financial center.
Thank you very much, Paul Muthaura. Thank you so much, Einstein Kanda and Paul Mwai. Thank you so much for your time, and to the audience, let's appreciate ourselves for being here in the first bit of the program. To our viewers who are watching us from at home, this is basically a curtain raise on what to expect today, especially as we wait for the arrival of President Uhuru Kenyatta to come in and, of course, unveil the strategic direction for the authority and, of course, for the entire industry at large. And it's also exciting to note that the support from the private sector is overwhelming. Remember, Top in Business is a joint initiative project by NTV and the Business Daily, and of course we'll set camp here. We're taking a break shortly, and later on we'll be back with NTV Today with my colleague Hudhaifa, and to also just give you an overall picture on the state of the economy, after which we'll cross over to this side of Savo Ballroom, where we'll of course get the official unveiling. My name is Laban Cliff, of course coming to you live from the Kenyatta International Convention Center. Stay tuned to NTV because we have a lot more lined up, especially in the business front. Thank you everyone for your time, appreciate it. Thank you so much. I know I squeezed all of you on this side, but you're now free to mingle and maybe spread across the entire place, and thank you so much. But I stand guided before we move and give you direction for the next bit of the program. I'm gonna consult just a bit.
strategic plan? No, write up anything to what you're launching because we're going on air now. Kimbia tu. Kimbia nayo. This is the booklet. Yeah, yeah. So because they paid for it, it would be nice to just mention it. We're on live TV. You can both be looking at it. Good morning, welcome to NTV Today. My name is Hudayfa and we are live from the KICC grounds where a lot of activities really is happening as the Capital Markets Authority tries to launch the strategic plan for 2018. The president is expected here. Many industry players are here and CEOs and chairmen of the top companies in the country. We'll be speaking about a number of things really to understand how the country, the state of the country's economy really. But right now I'm joined by Pradeep Purana, who's the CEO of Other River Mining, to speak and understand a bit about manufacturing, which is one of the key pillars of President Uhuru Kenyatta's Big Four agenda as he, of course, looks at ending the second term of his presidency. Mr. Pradeep, welcome to the show. Maybe you make us understand really what is the role of Other River Mining and your position as Pradeep Purana in this the launch of the Capital Markets Authority's 5-year strategic plan.
Of course, there are hundreds of CEOs and players in the capital markets, stockbrokers, financial analysts, fund managers, and so on. I am one of the many listed companies on the Nairobi Securities Exchange, and my role here is to understand what Capital Markets Authority is presenting today in its strategic plan going forward for the next 5 years.
Even as you look at that, maybe you would make us understand a bit about your position as the CEO of Other River Mining and Big Four agenda, manufacturing specifically. What is your role and how are you collaborating with both government and the private sector to maybe enable the government to achieve the GDP growth that they expect from the manufacturing sector?
All manufacturing industries contribute to job creation and to wealth creation in the economy. Today, manufacturing in Kenya is less than 15% of the GDP. We are a really diversified economy. But all over the world, manufacturing industry is what creates jobs, and this is what we need in the country most. We need to accelerate job creation through manufacturing and through agriculture and through housing and through healthcare. These are the four big agenda of President Uhuru Kenyatta's second term. And as a manufacturing sector, our job is to ensure that we give the right policy advice to the government to what will enable us to create more jobs and to accelerate manufacturing in this country.
Maybe then you'd want to mention really where we are. Manufacturing, you remember, has stagnated at 9 to 10% for the past 8, 10 years. And we are talking about a medium-term contribution of 15% and long-term contribution of almost 20% to the GDP. What are the key strategic steps that you're taking as players really to enable the government to achieve this?
Kenya Association of Manufacturers has been working very closely with the government in devising policies that will accelerate manufacturing sector in this country. One of the key areas that needs to be tackled is illicit trade and the supply chain of goods that come into the country without paying proper duties, without meeting the standards, and plainly counterfeit goods which upset the local manufacturing, and which disadvantage local manufacturing who go through the regulations and the compliances, which illicit trade does not. So that is one area which we really need to tackle, and at the moment the government has done a great job in setting up an interagency illicit trade initiative to make sure that we allow local manufacturers a level playing field against goods which are not meeting the same standards.
You've mentioned a number of things really in terms of maybe taxation and counterfeit goods hurting the manufacturing sector. But let me actually re-mention again taxation policy. How is this directly affecting your output as a manufacturing sector? And what conversations are you having with the government in terms of maybe lowering taxation so that you have enough incentives to produce locally for the market, locally and even regionally and internationally?
I think on the taxation policy there are many areas that can be advantageous to the manufacturing sector. If we create policies particularly for the export promotion, export industries that are exporting already have a series of benefits from a tax point of view. There are benefits of locating manufacturing industry in special economic zones now. So corporate listed companies which have a special tax rate for the first few years when listing on the Nairobi Stock Exchange. These are some of the advantages, and there are many others which can benefit and attract more industries into Kenya.
Then again, you briefly want to mention in terms of what do you call it, the incentives that you've received so far as a manufacturing sector. Are you really satisfied with it, or what are you asking the government to help you in terms of maybe incentivizing this sector so that we have 15 to 20% growth rate contribution?
One of the biggest job creation sectors of manufacturing industry is textile industry. There are very specific interventions that the government can make in allowing more job creation. In Ethiopia, for example, we have special economic zones which not only subsidize the manufacturers, but also provide incentives for manufacturers to employ more people in these sectors. We need to create and copy some of those policies under the special economic zones. Local procurement policies from the government, very key to promote local manufacturing. Furniture, Kenya used to employ more than 50,000 people in the furniture manufacturing sector until about 10 years ago. We have to revive that sector by promoting local procurement, and that can easily be done as one of the incentive packages.
Shall we then again speak about maybe how second-hand clothing and even second-hand cars are impacting the textile industry locally, and even manufacturing, assembling these cars locally? You remember a number of car assemblers, maybe they be Volkswagen, may they be Peugeot, are coming to set up shops locally so that they can be able, they see this as an entry into the expansive East African region with 180 million population. How then again does maybe second-hand vehicles and second-hand clothes hurt the textile industry and the motor vehicle industry?
I think the argument should be, are we able to compete at a price level with that is affordable by the masses? Are we able to manufacture cars or textiles at an economic level? There's a catch-22 situation. We need the markets and a level playing field for investment to happen at a scale where we can bring down the costs. Today, we have second-hand cars and second-hand clothing which distort the market, which do not allow manufacturing sector to scale up. So it's a difficult situation, but some difficult decisions have to be made by the government to allow manufacturers to have the confidence to invest and to scale up.
Then, as in your position really as the chairman of the Anti-Counterfeit Agency some few years ago, you must have done a number of steps to ensure that the Kenyan market is not flooded by counterfeit goods. You remember the sugar really circus around mercury, importation of sugar that contained mercury and whatnot, and even generally counterfeit and how it's hurting local manufacturers in terms of even competition in the general economy. You'd also remember that a lot of imports that are coming in from the Asian markets are hurting in a big way the Kenyan manufacturers. What do you say about that?
So my term as chairman of Anti-Counterfeit Agency has just expired. Flora Mutai, who was my successor as chair of Kenya Association of Manufacturers, is now the new chair of Anti-Counterfeit Agency. What I managed to achieve in the couple of years was to bring together all the government agencies into one body that is now tackling illicit trade and anti-counterfeit and the standards. So this new organization under the Office of the President is headed by Mr. Mushamu, Wanyama Mushambu, and it is very, very effective, as you've seen in the last few weeks, in stopping illicit trade, goods which are substandard, goods which are not have paid the right duties, and this is going to create, inspire confidence in local manufacturers, as I've said. We need a level playing field, and this is what the interagency body is doing.
Do you think then the anti-counterfeit agency and the government generally has played its role in terms of ensuring that counterfeit goods do not really make it to the Kenyan market and even distort the Kenyan market generally?
This is a supply chain that has to be stopped. There are many interventions at our borders, at the port, at the airports, and it is going to take time. It's not an easy task, but we now have the commitment from the government, from the president himself, to make sure that illicit trade stops in this country. So I'm really glad that that is happening now.
Shall we shift gears a bit and talk about the cost of electricity and cost of doing business, cost of production generally? And as one of the biggest consumers of electricity, do you think that the government has done enough to ensure that these prices are good enough for you people as manufacturers in terms of maybe enabling you to produce these goods at competitive rates in the market?
I think manufacturers will always complain about the cost of electricity no matter what it is. What is important is reliability, supply, and making sure that electricity is a part of the understanding that electricity is part of the total cost chain, not just the only cost that affects final cost of goods. I think we're generally satisfied with the direction of the government. There has to be efficiencies in Kenya Power Lighting and in the distribution, and we have to reduce the wastage from the generation to the availability of power to the consumers. Today, Kenya wastes nearly 17 or 18% of the electricity produced. We need to bring in efficiencies in that area. We need to bring in efficiencies in the service that is provided by Kenya Power, and that will automatically see a reduction in the cost.
Reliability, you mentioned reliability, and then you remember the president last year had mentioned, around December last year, had mentioned that they would reduce the taxes, the cost of power for manufacturers especially, so that they can employ more people during the off-peak hours. How have you benefited from this policy, and how many people has the Athi River Mining Company maybe so far been able to employ to work during the off-peak hours?
I think the government's intention was to use electricity that is available in the night time, because the peak load is generally between 6 p.m. to 8 p.m. when households are all lit up, are cooking and using a lot of electricity. At night time there is surplus electricity which then the manufacturers can tap into. But there was a second reason as well, to create a 24-hour economy so that we have safety in our industrial areas, we have safety in all our manufacturing locations, and we can run our plants day and night. And those who choose to run at night benefit from this reduced power cost. In my company, because we are running 24/7 anyway at full capacity, unfortunately there's not much of a saving. But those industries which can afford to now open a second shift or a third shift will benefit tremendously.
Let's then again speak about something that has happened over the past 2 years. The reduction, the capping of interest rates that happened in 2016. It has in a big way affected the SMEs, really. It has affected households, and to an extent it has also affected manufacturers. How has it affected Athi River Mining, if you'd want to mention?
Well, first of all, interest rate caps have reduced credit to the SMEs. And SMEs' buying power has been reduced for manufacturers like ours, so it has affected us as well. I think it is important to recognize that the markets must be able to price in the risk and be able to give credit at the right cost to all the sectors, not just the big players, but also to the SMEs.
So do you think, to an extent, beyond affecting the value chain, has it directly impacted the Athi River Mining Company?
Certainly. What has happened is the base 14% has become the norm. Good credit, companies with good credit were able to borrow at a much lower rate. but everybody's now at the higher rate. And then the ones that are SMEs have been crowded out altogether. So it's not been an effective instrument of policy for the government as far as increasing trade and business and manufacturing in this country is concerned.
I can read from your argument that you, in a way, are advocating for the removal of this rate so that we can have a market-based regulation.
I think what is important is to have less regulation, but to ensure that there's more competition in our banking sector, and that is the key to pricing our interest rates to the manufacturing sector, to the SMEs at the right price.
So what would be your advice really be if you were speaking now to a banker, say a CEO of one of the leading Kenyan commercial banks, or even the government really, in terms of maybe ensuring that there is competition in the banking sector?
I think you're putting me on a spot. The banking sector is really advanced in this country. The financial markets are mature, and as you can see inside, the Capital Markets Authority is creating more products to enable capital to move to the right users at the right price. I think that is more important, to create markets where capital can move to those who need it and those who can afford the risk.
Finally, as we try to wind up the conversation around what is happening generally around manufacturing, you remember that we have our elections after every 5 years, and it's quite heated. This really, to an extent, scares off investors. And ideally, there was a slowdown in the real estate market, which directly impacted the manufacturers, especially cement manufacturers like your company. Yeah. How does this constant electioneering and heightened elections really affect your output as manufacturers, and especially the cement manufacturers?
I think elections all over the world create a little bit of uncertainty in terms of who will form the next government, or what the policies of the next government will be, how they will affect business environment. The less uncertainty about our policies, the better for the country. It should not matter who the politician is or which the political party, as long as we have a sense of the agenda of what these parties and the politicians represent. So our focus as business and private sector is to engage in politicians and say, these are the policies which will help the country to grow. As long as we can communicate that and engage with the politicians, I think we're on a good ground.
Maybe then the final and closing remarks from you in terms of manufacturing and the Big Four agenda.
What I would like to see from the Capital Markets Authority is promotion of mortgage-backed securities for housing, for real estate construction, for infrastructure. I think that is where we can really channel a lot of our private savings into a product that will allow us to build millions of housing. This is the best way to build housing and to develop our real estate structure and to achieve the President's Big Four agenda.
Thank you very much, Mr. Pradeep. Thank you. Have a great conversation as it's happening there. And of course, as we had earlier mentioned, the President is expected here today to launch the 5-year strategic plan for the Capital Markets Authority, which ideally, as it's stated here, 2018-2023 strategic plan outlines the authority's blueprint for the 5-year period commencing July 2018, and comes at a critical time when the domestic financial market is primed to rebound and experience greater activity and performance. The development of the new plan was substantially informed by extensive consultations, both internally and externally, locally and internationally, with the authority's board playing a key role in offering guidance towards the crystallization of our vision to be an innovative regulator of a robust and globally competitive capital markets. That is what the President is expected to launch today, and a number of activities really are happening here. My colleague Laban is in the hall really, and maybe we'll be speaking to him later to make to give us an understanding of the people who are there and what ideally are the conversations that are happening inside. But as I had mentioned, we'd be having a robust conversation right outside as things happen inside. And Jared Osoro is joining me now, who is the policy head of policy for the Kenya Bankers Association. And a lot of things have been happening around the Kenya banking industry. You'd remember the Cabinet of Industry, it's happened in 2016, And a lot of conversation are happening around credit to the SMEs, credit to manufacturing, credit to different sectors in the Kenyan economy. But generally, I think Gerard is here in his capacity as an economist. Gerard, maybe if you would want to make us understand. Welcome to the show, really. Make us understand really what brings you here today.
I think we are here because we are part of the conversation around how we can deepen the financial sector generally. And the capital markets are a very integral part of the financial infrastructure. So we are here essentially to see how the strategic plan that is being launched is going to fit in the broad aspiration of having a deep financial system that supports the economy's growth aspirations.
We've been talking about how we can deepen this financial sector for a while now. We've been having this conversation. And somebody, I think it's a report by the Kenya Bankers Association mentioning that almost, one Kenyan can be able to access banking services at the village level. You've been able to take access of these banks really to the lowest level in our Kenyan society in terms of maybe creating so many other outlets, even mobile banking, which is a big industry in Kenya really. What are you doing as Kenya Bankers Association to deepen the Kenyan financial sector?
I think you're right in your observation that the network of the banks and other financial market players has really gone to the grassroots level. I think that is really promoting what you can call access. Now the next level in making sure that this serves the households and the businesses at that level is to ensure that there's enhanced usage of some of those services. And that's where now there's a blend between technology and the traditional way of providing financial services in a manner that enhances the usage of those financial services and not necessarily access, which may not necessarily translate into true financial inclusion.
Maybe then you'd want to mention how, yes, there is access, but to an extent that people cannot be able to afford loans to do businesses at the lowest level. That's why a number of people, including the Kiambu Member of Parliament who first came up with the capping of rates in 2016, was arguing that we need to make these loans accessible to the people at the lowest level so that they can be able to do business at that level. What have you done as the banking sector in terms of maybe making these loans and making finance accessible and affordable to the lowest level?
We are very much aligned to the aspect of wanting to have finance accessible. That we are aligned. But if you prescribe remedies that curtail access while you're addressing the cost aspect, you'll probably be negating the stride that we've made insofar as financial inclusion is concerned. And what we've done as an industry and all the other stakeholders is to ensure that we have an holistic way of addressing all aspect of the cost of funding instead of looking at controlling the price without necessarily looking at how that price is determined. For instance, you look at the financial year 2018-2019 budget, there are a number of measures that have been spelled that are seeking to bring down the government fiscal deficit. If government borrowing is reduced, then we probably have to start seeing a situation where the banks and other financial players are now giving money to the private sector instead of the government.
Then again, Gerard, if you'd want to mention in terms of maybe how, to an extent, there have been an argument back and forth, and I know you don't want to speak about it today, in terms of maybe the capping of rates and removal of this capping of rates. How has it affected making these loans accessible to the lowest level, really, and even to an extent has had, the capping of rates to an extent has had access of credit to the private sector and to households and SMEs? What are you doing really, or what conversations are you having as the banking association to really facilitate and make this credit accessible to the SMEs in a manner that really does not bring a lot of arguments in terms of maybe the pricing of these loans?
The first thing is to acknowledge that Kenya is the leader in Africa insofar as lending to SMEs is concerned. The gross portfolio that goes into SMEs is about 23%. Now, the other African countries, we are talking about less than 10%. So already we've made strides insofar as lending to SMEs is concerned. But there's an acknowledgement that to access and the cost of credit to SMEs must be looked in a manner that, you have the enhanced capacity of the SMEs themselves. And we have a program that is now building the capacity of SMEs so that now you de-risk them, so that when they go to access funding, they access that funding in a manner that is affordable. Because many of the SMEs are actually very informal. They lack the basic capacities in terms of even preparing bankable proposals. So when you enable them in terms of enhancing their capacity, you're in a way de-risking them and therefore enabling them to access funding more affordably.
Really interesting conversation, really. And then again, generally, let's speak about the state of the economy. In your position as an economist, really, you remember that we had election last year, and this prolonged election period had hurt in a big way the investment, that the flow of FDI and even LDI to the country. What can we do as a country to come up with a certain policy that is to an extent predictable, so that we avoid this uncertainty around our elections?
There's one thing that is actually working for this economy insofar as the political calendar is concerned. We know for sure that elections are held after every 5 years, and that's a given. The only challenge I see is where we have a very noisy political environment that investors look at and feel that they should hold on until the election period is over. That's why we saw a reversal of portfolio investment in the economy around the election time, but we are seeing that now being negated by the inflows that are coming in. And I think that is why you found that last year the economic performance was lower than it was over the previous 5 years. And I think now we are starting to see a sense of optimism coming through. But that sense of optimism must be underpinned by a predictable policy environment, a resurgence in credit to the private sector, and I think in many respects the maintenance of the momentum insofar as providing the requisite infrastructure that will be sufficient for people now to pump up their levels of investment and capacity utilization, because a number of investments basically have been operating at below capacity. So if you have an environment that is conducive, essentially what you're doing is that you're going to enable them build up the capacity in which they have and then seek to have additional capacity. Then further, we're likely to see FDI come in, and we want to see FDI come in a manner that is diversified, not necessarily FDI that's seeking to invest in the extractive industry and in the traditional sectors, but in other sectors, probably the service sector, the financial sector, and the manufacturing sector.
Maybe then we'd mention the president's Big Four agenda, really. And it has a lot of private sector contribution. They're saying how they want to have a public-private partnership in terms of maybe enabling this Big Four agenda of the president. And manufacturing, which is one of the biggest pillars of the Big Four agenda, is largely played by the private sector. To an extent, are you optimistic that the Big Four agenda would be achieved in President Uhuru Kenyatta's second term?
The big agenda is a very ambitious, the Big Four agenda is a very ambitious agenda. And I think the first year of this administration is basically laying the groundwork towards the accomplishment of the Big Four. So what needs to happen for the Big Four to be accomplished is really to make sure that the plans for implementation are well articulated, such that now the resource from the public sector and the private sector are really going to be complementing each other in a manner that will lead towards the realization of those Big Four. So having said that, I think they are very ambitious, they're in the right direction, but the accomplishment will depend on what kind of framework is laid out in the first year of implementation.
And then maybe we mention a regional perspective, really. You remember that a lot of activities are happening in terms of reforms within Ethiopia. Ethiopia has been growing at double digits for the past 10 years. There is a number of reforms that are happening in Uganda, in Tanzania. How does this, to an extent, threaten Kenya as one of the leading economies in the region?
Kenya indeed has been a leader insofar as the economy of the region is concerned. Over time, we are seeing other economies putting their houses in order in a manner that are seeking to compete with Kenya. But the fact is, when the regional players are also enhancing their capability and their economies, it plays well to Kenya, which has a bigger capacity in the sense that our markets are actually going to continue expanding. I know there are quite a number of Kenyan investors who are looking into the Ethiopian market, for instance, given that, there is huge potential there. So I think many of the investors in Kenya have a regional orientation insofar as their businesses are concerned. That's why we have, for instance, in the financial sector, a number of players really playing across the region. So it's really incumbent upon the investors in Kenya to look at the region as an opportunity, as opposed to looking at what's happening in other markets as a sense of competition.
As we wind up, really, I would want to, I cannot end this conversation without asking you a question that almost is asked by every Kenyan out there. In terms of our public debt position, over 5 trillion shillings, are we able to sustain this at a time when we are we have ambitions to roll out so many other development projects, and at a time when we are continuously been servicing our loans to the extent of 60% of the things that have been raised by the taxes that have been raised by the Kenya Revenue Authority?
I think the scope for the economy to take much more debt than we have right now is very thin. And the reason being that we accumulated debt within a very short time, and the structure of the debt that we accumulated over that very short time has been of a short-term nature. That means that our obligation on a day-to-day basis or on a regular basis has increased substantially. So I think now, going forward, any investment that are going to be put forth by the public really must be considered to be financed by any other source other than debt, because the scope for financing debt is getting thinner by the day. And if we continue like this, we are going to move into a debt unsustainable levels, which will be very disastrous for the economy.
Lastly, the state of corruption and how it's hurting the economy.
Obviously, corruption hurts the economy. And I think the pronouncements that we've seen insofar as wanting to combat corruption is probably what gives us hope that, you know, we are probably coming into a place where corruption is going to be a thing of the past. But I think we need to see how it goes, because it's still early days. We want to see how the pronouncements will translate into actual combating of corruption, which is really a constraint to economic progress.
Thank you very much, Jared, who is the head of policy and research at the Kenya Bankers Association, who actually really was giving us his perspective in terms of the state of the economy. A lot of activities happening here at the KICC grounds as the Capital Markets Authority prepares to launch their 5-year strategic plan. The president is expected here. A number of industry players, listed companies, and the private sector are represented here. And a lot of activities going in. As we had mentioned, our reporter Laban Cliff is inside. We might link up with him later. And we will definitely be having contribution from every part of the country, from the counties, and now we would be joined by our reporter Lois Wangoi, who's in Eldoret, to help us understand the state of the economy. Should be speaking to a financial analyst. Lois, if you can hear me, good morning. What is happening in Eldoret, and maybe you take over.
Thank you. In that same position of upstanding, shall we have the opening prayer? I'm told there's a CMA staff member who will give the opening prayer to please come right to the front for the same.
Let's pray. Heavenly Father, we come before you this morning with thanksgiving for the gift of life. We thank you for this function today. We thank you for our leadership. We pray for our president and his deputy and all the leaders as we start this day, Almighty Father, when we are launching this Capital Markets Authority strategic plan. We pray that you guide us, be with us, and that all the aspirations that we have in this plan shall come to pass. We pray this trusting and believing in your holy name. Amen.
One, two, 1, 2. on the 15th, 16th day of the month. And this budget starts from the implementation of the 2018-19 budget starts from July 1st. So we are barely half a month into the new financial year. So whatever is supposed to be spent in this financial year is probably not even spent. But you know, the Mwananchi, the level of excitement is probably what would say the only thing that you could say has an impact to spend the money that is allocated for this financial year.
Kenyans got tired with the expecting, yeah? As you say, you know, these analysts, they analyze it differently. But Kenyans on the ground, they know that, yes, the budget has been read, and there is this allocation for ABCD. Whatever we wanted, if it's not mentioned there, it goes. So they remain there as normal Kenyans. You know, Kenyans are used to. Budgets come and go, but we remain there. Those people who understand budgets, like my colleague here analyzing budgets and doing ABCD, that this money was put to this, you know, you find that there is like 800 billion that was allocated to pay debts. Yeah? Now, who will follow to know that if that money paid debts? No one. And okay, there are those who know will follow up and say that this money used to pay debts.
But for Wanjiko, that's really...
But for Wanjiko, we do not know. Next year, we shall also be told there is another 900 billion that is being used to pay debts. We do not know whether those debts have been paid or not. Even if they bring it, they say that we did not get the money, we did not hit the target that was required. What happens? Wanjiko remains there. This budget thing, it is for the people up. It does not go down unless they have their own interpretation of analyzing. Yeah. The common Mwananchi really, he's there. He or she hears about budget reading. Here, this much has been allocated to medical care. But unless that amount is put into action, that we see, like referral, we see Kenyatta, there is a lot of money that has been allocated to Kenyatta. Now, how will we see that money?
Kenyatta Hospital.
Yeah, Kenyatta Hospital. If you go deep into the budget, there is specific amount of money that has been allocated to Kenyatta National Hospital for improvement, for medication, for ABCD. But unless we go down to say that, was this money really spent on Kenyatta? What did it improve in Kenyatta? Because last year, there was money which went there. This year, there is this money that has gone there. Is there any improvement?
So in essence, what you're saying, Mr. Kenga, is that even after the budget has been read, then there needs to be framework to ensure that indeed the money is allocated to specific projects or to specific parastatal bodies then goes into that, so that when Wanjiko, for instance, goes to Moi Teaching and Referral Hospital, they will be able to get medication there, and when they go to supermarket, then they'll be able to afford unga, a packet of unga.
That is exactly what I'm saying. You see, there is this project where the president launched it some years back ago, that there were this equipment in hospitals that were being leased, and they will be supplied to all hospitals, referral hospitals, in all the 47 counties. You see, if someone goes to Kenyatta National Hospital, if someone goes to referral hospital here in Eldoret, the person can go to the X-ray and see that this is a new machine that was put here.
And so it's functional.
And it's functioning. Not only a new machine, the machine is functioning, it is effective. So you can say, yes, we can see those things were leased and they're working. They came down to Mwananchi and Mwananchi is benefiting. But now when you talk about 800 billion being used to pay debts, first of all, which debts? You know, 800 billion is more than even the budget of Kenya, of Uganda and Tanzania. But it's being used to pay debts. Next year, God willing, when we are here, you'll be told there is another 900 billion which is being used to pay debts. Now, can they tell us last year, the money they allocated to pay debts, which money went to which debts? And which debts are this anyway? Yeah.
Mr. Kiprotich, my colleague Gabriel Kudaka was speaking to, is currently at Eldoret Town, and we'll be linking up with him, and I'm sure Wananchi will be giving their input on the same. And I want to imagine what Advocate Kenga is saying, maybe the opinion of some of the residents here, and of course in the whole of the country, where you sit as an economic analyst. Of course, we can say the budget is very good, there was this allocated to this, these will work for this. But really, is Wanjiko able to get value for their money through this particular budget, such that if person Y goes to Jengo for a day and he's paid 500 shillings, will he be able to afford healthcare, food, and even housing, education for his family? Is that reflective in this year's particular budget?
Well, if there is one challenge that Kenya has not been able to address in terms of in its budgeting, is the cost of living. The cost of living for the poor Mwananchi is still very high, and Kenyans are not able to afford everyday needs with the money that they have. So that is one of the challenges. But if you look at, for example, Eldoret, for example, one of the things that would interest them the most is on agriculture.
Okay.
And the national, the budget allocated some 3.4 billion.
Okay.
Sorry, 4.3 billion.
I will cut you short because we should be handing over to KICC, where Mo is continuing with matters business. Of course, we pick this conversation much later.
Mission to be the premier choice and ultimately to be a part of Kenya's success in becoming an international financial center.
Let's appreciate the Capital Markets Authority for that milestone. To our viewers tuned in Kenya and around the world, welcome. This is Top in Business coming to you live from the Kenya National Convention Center. My name is Laban. What you've just witnessed on your screens is basically a snapshot of to what the Capital Markets Authority is doing in aligning with the Big Four agenda and exactly to the very detailed various facets that we'll be embarking on for the next 5 years. What you see there is an overall goal. Ideally, it will be kind of different, you know, when you talk about the overall government strategic plan and now to the corporate strategic plan. And there's an aspect about people. And later on, we'll be hearing from the CMA staff themselves into an initiative that they've just launched internally, which is called Uwezo Kipeo, which is actually a way we work and is a call to rally the various staff, of course, in the authority into achieving the vision. Something that is worth noting is moving towards regulatory excellence and maximum empowerment. So what I'm reminded of is that culture eats strategy for breakfast. So indeed, CMA is living up to this billing. So please, one more round of applause to CMA and the entire team that is working behind the scenes to deliver this vision. So ladies and gentlemen, just so that we can flow into the program, allow me to ask our various guests who I mentioned earlier. We are honored, just for the benefit of our viewers. Our chief guest today is Cabinet Secretary and the Minister of Treasury, that's Henry Rotich. I'm going to ask him to please make his way right to the front. We're going to ask him to take the seat up front here. Together with the Chief Administrative Secretary, that's Nelson Gashuhe, who's also represented here. We have our CMA Chairman, that's James Ndegwa. We have a CEO in the Capital Markets Authority, that's Paul Muthaura. And we also have us to represent the board, that is. Allow me also to welcome CMA Director, that's Madam Christine Okoth, to also join us right at the front, together with Madam Rose Mambo, of course, representing CDSC, and last but not least, Jeff Odundo, representing the Securities Exchange. So, ladies and gentlemen, to come up on stage, and then we shall begin with the official process that will now lead up towards the official unveil, of course, which will be a highlight to be showcased today here. Thank you very much. And now, of course, to our guests, if you're following these proceedings on our social media platforms, please remember to tweet us with the hashtag #TopInBusiness. And also, we were live on NTV today, so please also follow the link on hashtag NTV today. And of course, we'll keep you abreast also with various deliberations that take place within this session, of course, out of this session as we proceed. So, sir, just to also give you an overview, ideally it will not be fair to only speak on the side of the CMA. It will be nice also to recognize the various other industry stakeholders who are represented here from various sectors. We talk about the Big Four, but again, it touches on various sectors. And at the risk of missing to mention any one of you, I'm just going to ask us to appreciate each and every one, chairman, CEO, directors represented in the house today. So please give yourselves a round of applause for making it here. And my job here is simple. I'm going to invite the chairman of the Capital Markets Authority to take it over from here. That's Mr. James Ndegwa to give his opening remarks. Over to you, sir.
Thank you. The Cabinet Secretary to the National Treasury, Mr. Henry Otich, Chief Administrative Secretary, National Treasury, Principal Secretaries present, board members and chief executives of the financial sector regulators present, board members and chief executive of the NSE, board members and the chief executive of the CDSC, chairpersons of our industry associations, chief executives and representatives of capital markets intermediaries, fellow board members, management and staff of the Capital Markets Authority, members of the Capital Markets Master Plan Implementation Committee, distinguished guests, ladies and gentlemen, and after all that list, all protocols observed. Good morning and welcome to the launch of the Capital Markets Strategic Plan 2018-2023. On behalf of my colleagues on the board, the management and the staff of the Capital Markets Authority, I wish to thank all of you for setting aside the time today to be with us on this very important day in the life of the authority. I especially thank our guest of honor, the CS National Treasury, for his presence. Our guest of honor, the process of developing the strategic plan that shortly we shall be requesting you to launch commenced with a comprehensive analysis based on the achievements, learnings, experiences, and challenges of the just ended plan 2013-2018. Following extensive participatory stakeholder engagement, the authority has reviewed and refocused its vision, its mission, and strategic objectives. The Capital Markets Authority's new vision is to be an innovative regulator of a robust and globally competitive capital market. The capital markets are very dynamic and with growing sophistication, especially in the technology space. And therefore, it is incumbent on us to strive to support innovation within the industry while simultaneously embracing it ourselves at board, management, and staff levels at the CMA. The strategic plan envisages positioning Kenya's capital markets as the premier choice for investors and issuers through robust regulation, supportive innovation, and enhanced investor protection. This new mission is fundamentally focused on continuously improving the market experience of investors and issuers and intermediaries of all classes to fully leverage the opportunities provided by robust and dynamic capital markets. The plan commits resources to attracting both investors and issuers in equal measure and tailoring our oversight approach with an appreciation of their diversity and levels of sophistication. CS, the authority's strategic plan 2018-2023 is being launched at a highly appropriate time. The plan period coincides very substantially with the renewed term of the Jubilee government. In developing this plan, we have taken inspiration from the Big Four agenda of manufacturing, housing, healthcare, and food security. It is clear to us that Kenya's capital markets can and must play a key enabling role in delivering the Big Four agenda, and the range of initiatives to be pursued in this regard are clearly spelled out in the strategic plan. Our guest of honor, for 4 years in a row, 2015, 2016, 2017, and I'm delighted to say, just last week, the authority has been voted the most innovative capital markets regulator in Africa. We are therefore confident that we are not being overly ambitious in projecting to transform Kenya, in partnership with our stakeholders here present, from being a frontier market to an emerging market by 2023. In developing this strategic plan, we were encouraged by benchmarking assessments conducted against both emerging and developed markets, which revealed that the CMA is at par with our leading counterparts in terms of enforcement capacity, as well as the quality of our legal and regulatory framework. In speaking about the CMA's capacity to implement this plan, it is important that I emphasize the authority has embedded a culture of regulatory excellence, which has also seen it, a state corporation, emerge among the best companies to work for in East Africa. Coming as I do from the private sector, I must say that in the time it's been my honor to chair the board of the CMA, I have been tremendously impressed at the professionalism and commitment of the authority's management and staff, and see as they are truly exemplary public servants. And since I'm blowing our trumpet, I must also note that the CMA has consistently emerged among the top performers in each of the cycles of performance contracting, evidencing our commitment and capacity to support national priorities. Now, talking about national priorities, I want to take this opportunity to highly commend His Excellency the President for what I call the national crusade to restore integrity at the heart of the public service in Kenya. This is a war in which failure is not an option if Kenya is to fully realize its true and immense potential. And these are the values we must hold dear as a society and as a people. Our guest of honor, I assure you that inasmuch as the authority appreciates the recognition it has received for its innovation and development role, it also takes its regulatory role, and in particular, the promotion and protection of investors' interests equally seriously. The CMA has, in recent years, introduced codes on enhanced corporate governance and stewardship. And generally in our approach, we encourage that proper procedure and practice is followed. However, where it is not, we take regulatory action. And because it is topical, allow me to assure everyone that the authority's enforcement action is always undertaken in a strictly objective and impartial manner. Now, generally, the authority's initiatives and actions in this regard are all intended to ensure good and proper conduct in Kenya's capital markets, and in doing so, I think we do our part in supporting the President's insistence on integrity wholeheartedly. Cabinet Secretary, while we reiterate our commitment to ensuring that the CMA's performance targets are met in the strategic objectives highlighted, we seek your support, as well as that of the State Corporations Advisory Committee, SCAC, to grant the authority the necessary autonomy to be able to effectively execute our statutory responsibilities. Enhanced autonomy would allow us to devote optimal resources to the successful implementation of the strategic plan, and by extension, the realization of the Big Four agenda and Vision 2030. CS, you know very well that a well-developed and properly functioning financial market has a central role to play in achieving Kenya's target of transforming itself into a newly industrialized upper middle income country by both generating wealth and safeguarding it. The board and management of the Capital Markets Authority commit to effectively guide the implementation of this new strategic plan by actively engaging relevant stakeholders to continuously align it with Kenya Vision 2030, the Big Four agenda, and other national development policies. Ladies and gentlemen, this plan recognizes the invaluable strategic support and influence that will be necessary from our key domestic and international partners for its successful implementation. These partners include the Executive Office of the Presidency, the National Treasury and Planning, Kenya Revenue Authority, the financial sector regulators, international development partners, global financial sector standard setters, our domestic market, and international stakeholders, among others, many of whom are very well represented here today. We therefore look forward to all of your continued and deeper collaboration with the authority to ensure that the Capital Markets Authority Strategic Plan 2018-2023 succeeds, not as an end in itself, but for the benefit of the capital markets, the economy, and most importantly, the people of Kenya. Now, as I conclude, I would like to take this opportunity to register my appreciation to all the various parties, stakeholders, and indeed the CMA team for their concerted efforts in making this launch possible and for your kind audience. And with those few remarks, it is now my pleasure and honor to invite the Cabinet Secretary, National Treasury and Planning, Mr. Henry Otich, to make his remarks and officially launch the Capital Markets Authority's Strategic Plan 2018-2023. Thank you very much.
Thank you very much, Chair. Chief Administrative Secretary and Principal Secretaries who are present here today, Chairman, board members, Chief Executive of the Capital Markets Authority, all the leadership of the financial sector, regulators and industry players, distinguished guests, ladies and gentlemen. Good morning. It's almost still morning. Very good. First, let me say that as you all are aware, His Excellency the President was to be with us today to launch this strategic plan, but due to very many commitments that came up, he's asked me to represent him in this launch. Obviously, I was also going to be there, so I want to say that accept the apologies of His Excellency the President. He would definitely have liked to be with you for this very important occasion. Nonetheless, let me start by saying that it's really a great pleasure to be with you today during this launch of the Capital Markets Strategic Plan. I know you've already gone through a few, and we have just listened to very elaborate and well done plan that the CMA has developed, and I would really want to congratulate them for that good work. Let me at the onset also take this opportunity to thank you, stakeholders, for showing solidarity with the CMA and by turning in large numbers this morning. As you all know, our financial sector is recognized globally as a very vibrant sector. Our financial sector has been expanding locally and across the sub-Saharan region with innovations driving financial inclusion. The rate of adoption of digital financing in Kenya is considered among the highest in Africa. Kenya is now recognized as a world leader in mobile money technology, reaping the benefits that come along with it. Our capital markets has the largest market capitalization in the East African region, with a host of products and innovation. Our Vision 2030, as you all know, identifies financial sector as one of the priority sectors to enable achievements of the annual economic growth of at least 10%. This will be achieved through creation of a vibrant and globally competitive financial sector that will promote high levels of savings to finance Kenya's investments need. Achieving a growth rate of 10% will help Kenya make a significant progress in attainment of sustainable development goals. Achievement of this high level of economic growth target requires funding of the key Vision 2030 projects. In this respect, the sector is expected to mobilize financial resources and increase investments from both domestic and international sources. We require about investment level of over 30% of GDP and savings rates of over 25% of GDP to sustain just a growth rate of 10% that we are talking about. So we are still way below that, but we look forward by 2030, we should have had investment levels of over 30% of GDP. Currently, I think we are in around 23, 24, thereabout. Of course, as we develop, capital markets plays a bigger role even than the banking sector. At the moment, the banking sector assets contribute over 75% of financing in Kenya, while capital markets and others just contribute the remainder. As we develop, as we become an emerging market, we should be seeing equity and capital markets assets playing a more significant role in funding businesses and enterprises. This is what happens in most of the countries where capital markets assets are larger than bank loans in financing investments. So we should be seeing move towards that direction, and we should be seeing an increasing role of capital markets in funding our businesses as we continue to achieve our Vision 2030. So I urge the capital markets to aggressively work on these aspects until the share of capital assets in funding business requirements. I don't mean that the banking sector will be irrelevant, but obviously they will continue to play a bigger role as we move forward. To enable the sector play its role, the government has been undertaking various policy measures and reforms geared towards enhancing financial system stability, improving efficiency, and expanding financial access in line with the targets set out in Vision 2030 and the third medium-term plan. First, with regard to the stability, we have been taking steps, as you have seen, to strengthen the regulatory framework through revisions to our legislations. Also regulations and guidelines alongside steps to strengthen financial oversights and enforcement. Strong progress was made in adopting risk-based supervision across all the regulators. In addition, we have strengthened our anti-money laundering framework. Further, the Nairobi International Financial Center Authority was established in 2014 through an executive order and an interim secretariat of NIFCA established at the National Treasury. The Nairobi International Financial Center will be critical to attracting international capital into the Kenyan market. We will be shortly appointing the board and interim management that will spearhead the finalization of the technical and operational aspects in readiness for the launch of Nairobi International Financial Center later this year. Second, on the issues of efficiency, we have addressed quite a number by implementing in the banking sector recommendations of the Committee on Enhancing Private Sector Credit and Mortgage Financing, which I constituted in 2014. We have implemented measures to improve transparency and competition, and we are now working on consumer protection issues in the financial sector. The Movable Property Security Rights Act 2017 is in place, and lenders can now provide credit using movable properties as collateral. In addition, we are finalizing the establishment of the Kenya Mortgage Refinance Company, which will make it easier for banks to access long-term finance for home loans. The secondary trading of this mortgage asset class will also follow shortly. Kenya has made tremendous progress in expanding financial access and is now considered a global role model. The FinAccess survey of 2016 showed that the proportion of the adult population using formal financial services rose to 75.3%, up from 66.7% in 2013. These achievements have been hinged on the enabling regulatory environment coupled with the adoption of innovative technologies to expand access. Ladies and gentlemen, despite these achievements, we should not be complacent. As a matter of fact, now is the time to build on progress made along the three pillars of stability, efficiency, and access. I challenge all the financial sector players present, and in particular the capital markets players, to work on new modalities and reforms that will strengthen financial stability, improve financial efficiency, and expand access to financial services. Therefore, in evaluating performance and success in this sector, each of the financial sector players ought to review their contribution around the three pillars. I believe, and I've seen in the strategic plan that we are launching today, we are satisfying these critical benchmarks. So as players in the financial sector, we need to reflect on really critical issues around the three pillars I've just mentioned. For example, have we fully really strengthened the stability of the financial sector, and in particular capital markets? Are our markets well regulated? I must say there is really a lot of work has been done. Significant progress has been achieved, but there are still some various market failures that require continued regulatory attention. On access, issue is, are capital market products accessible to common mwananchi in Kenya? Are they able to trade in capital markets? I must say, there is a lot of work has been achieved. We witnessed the introduction of new products and innovation in the capital markets. But there is still room for more innovation. I believe the strategic plan has been designed in a way to address these concerns. Ladies and gentlemen, given this context, today marks a very important occasion as our capital markets fraternity comes together to support the implementation of the strategic plan of the Capital Markets Authority, detailing the role that our market regulator will play within the markets over the next 5 years. The plan we are launching today serves as a clear commitment of just one, but nonetheless a critical national institution in executing its role to position Kenya as the heart of the African capital market financing and investment. In addition, the strategic plan is in line with the 10-year capital market master plan that we launched some time back. I wish to laud the Capital Markets Authority for consciously aligning its strategic directions with our national development agenda as elaborated in our third medium-term plan of our Vision 2030 and Sustainable Development Goals. This will ensure that Kenya's capital markets have their desired impact in supporting economic development and empowerment. In particular, we're very pleased to note that the strategic plan has been aligned to the government's Big Four agenda. Without doubt, the plan has clearly and specifically demonstrated how the capital markets are going to support food security, affordable housing, manufacturing, and universal healthcare. I urge other public and private sector entities in the country to follow the lead of the board and management of the Capital Markets Authority in making a cautious and proactive decision to align the strategic plan with the Big Four agenda. Given the huge financial outlay of development projects, and in particular those of the Big Four agenda, there is need to boost domestic and foreign investment. The level of new investment remains limited, with only 66 companies listed on the Nairobi Securities Exchange. To encourage new listing, and particularly by local firms at the Nairobi Securities Exchange, I urge the Capital Markets Authority to review its regulatory and legal framework to encourage new listing. This will enhance liquidity at the capital markets and make our stock exchange vibrant. Ladies and gentlemen, in order to enhance the role of the capital markets of providing long-term funding critical to economic transformation, it is important that we scale up reforms that will improve corporate governance, enhance uptake of wide range of capital markets products and services, combat money laundering and terrorism financing, and encourage uptake of technology innovation. First, on corporate governance, I welcome the efforts by the CMA in consultation with its stakeholders in establishing a corporate governance code for issuers of securities and implementing a stewardship code for institutional investors. This will guide the industry on sound corporate governance practices and ensure that institutional investors take up a proactive role in promoting sound governance in listed companies in Kenya. However, to reap the full benefits of the sound corporate governance, it is vital that CMA strengthen enforcement of the guidelines to curb cases where listed companies take advantage of any loopholes in the guidelines. Second, on the money laundering and terrorism financing, allow the joint efforts of the CMA in consultation with the Financial Reporting Center and other relevant organs of government to issue guidelines to combat money laundering and the financing of terrorism for capital markets intermediaries. Money laundering has devastating economic and security and social consequences. It diminishes government's tax revenue and therefore directly and indirectly harms honest taxpayers. Indeed, Kenya cannot afford to have its reputation and financial institutions tarnished by associations with money laundering, especially in today's global economy. In my budget statement that I delivered last month, I proposed amendments to the Proceeds of Crime and Anti-Money Laundering Act and Capital Markets Act in order to curtail money laundering and terrorism financing and address key capital markets malpractices, including corporate governance breaches, embezzlement of investors' funds, front-running, provision of misleading information, and effective management of investor compensation fund. I believe that your strategic plan will benefit from these innovative measures. Third, while capital markets players have introduced new products and services, the available range of products and innovation within the Kenyan capital markets is still low by international standards. I therefore urge CMA and other capital market players to go the extra mile and introduce other products and innovation. Availing these products and innovation will incentivize increased participation in the capital markets. On technology side, while Kenya still enjoys its stature as a hub of innovation, the country's capital markets have suboptimally utilized the opportunity represented by fintech innovation to push capital markets activity to the next level by broadening products and service offering, deepening market participation and liquidity, and driving transformative economic development. It is widely anticipated that fintech will be one of the key hallmarks of competition between Kenya and other jurisdictions globally in terms of new listing, financial access, and savings level. In walking this path, we, however, cannot detach fintech opportunities from cybersecurity threats, as the two are intertwined. Without robust cyber defense mechanism, the benefits of fintech might be lost. This therefore calls for preparedness in several areas, including cyber governance, cyber security partnership, robust infrastructure, and the implementation of advanced cyber security technologies. I therefore urge the CMA to implement explicit standards on cyber resilience owing to the high reliance on technology in the securities and derivatives markets, and the task of our industry to implement the same fully. In conclusion, ladies and gentlemen, I wish to re-emphasize that the existence of the sound financial sector, and in particular the capital markets, is crucial in supporting economic development and serves as an engine of growth in our own right. Therefore, we must strive towards strengthening the resilience of the capital markets sector in order to be able to tackle and surmount risks and challenges in the future. I also wish to reaffirm the government's commitment to ensuring that the capital markets are well positioned to support national economic growth and to meet future challenges from regional competition and globalization of Kenya's position, as Kenya positions itself to be a competitive international financial center. So once again, let me take this opportunity to congratulate the Board of the Capital Markets Authority, management and staff, and the entire capital markets fraternity for the support leading to the launch of this capital market strategic plan. Well done for the job. So it's one thing to launch a strategic plan. It's another thing to implement. So I'm looking forward for a robust implementation. I saw you have a very clear implementation plan. And I want to assure you that the National Treasury and Planning will support you as you walk the journey of implementation. With those few remarks, it's now my pleasure, I don't know whether there is a ceremony, but it's now my pleasure to formally launch the Capital Markets Authority Strategic Plan for the period 2018 to 2023. Asanteni sana. Thank you.
Thank you, sir. And one more round of applause, please, to our chief guest. Yes, there's a ceremony, and you're well part of it. And I'm going to give you direction into how we're going to jump in and witness this climax, which is the launch of a CMA strategic plan. So at this point, I'm going to ask our good choir out there, that's the CMA choir, to please take the stage. You're going to be setting up and getting ready to tell us how yourselves and the entire staff are actually going to implement this, because we keep mentioning about the people element. Again, I'm going to ask, as the choir is getting set up, sir, just so you know, by the way, this is the first digital launch, strategic plan digital launch that we're witnessing. So, of course, the bedrock being technology. So, ladies and gentlemen, I think to this milestone, let's appreciate CMA for leading the way. So, should we come to your organizations, we expect nothing less. So, I'm going to ask us to please, in the spirit of being digital, please have your phones on, and hope your Twitter pages are on also. We're going to move with the hashtag CMA Strategic Launch. That's for 2018-2023. So, shall we all please get our phones out kindly? You don't want to miss the moment on stage. After which, I'm going to ask my colleagues in the media team. Of course, we need this captured on the front pages of the Business Daily and a lot more. I see Diana is well positioned. So we're going to use this area right at the front for this activity. And because of the fireworks and all the frenzy that we witnessed, I'm going to ask my sign language interpreters for your health and safety, Raphael and Berecha, please, just at this point, if you could kindly just take your seats just right at the front, really briefly, as we get into the launch. So, shall we all let's give them a round of applause, brother. They've been doing an amazing job right here at the front. Thank you. So, sir, at this point, it's over to you, yourself, and our chair, James and Paul, please, if you could lead our chief guest right to the front here by the cocktail table. Right? Sure. I think Jeff and the team, you can just join in also. Yes, please. Jeff Rose, please come down. Christine. We're going to position. And shall we all please be on standby, as I said, with our phones and also ready to tweet and share. I should mention that we want to do this in an orderly fashion. So I'm going to ask us all also to give them a countdown. So in just about now, and I stand guided by my producer, Debbie, if we shall begin. All right? Great. So ladies and gentlemen, are you ready for the launch of CMA's strategic plan for the next 5 years? Awesome. So let's give them a countdown in 3, 2, okay, wait a minute. I'm not counting alone. Let's all go. All right, let's go. 3, 2, 1. Let's appreciate our Honorable CASZ presses the button marking the official launch of the Capital Markets Authority's blueprint for the next 5 years. And there's an infographic right up on stage. Ladies and gentlemen, please, the launch of the Capital Markets Authority's strategic plan for the next 5 years. Let's give them a round of applause to the entire team that has made this possible. Thank you, sir. Thank you very much. And to also signify this handover, I'm going to just hand over. This is the popular version for those of you who don't have your gadgets in place. So I'm going to hand it over to Paul to present to you, and we're going to have a brief photo session. So that's a popular version of the strategic plan handed over by CMA to government, and of course with the challenge of ensuring that we can live up to it and push it up towards implementation. Ladies and gentlemen, one more One more time, please. One more round of applause to this milestone. All right, as they still continue to enjoy the popular version, I'm told we have to replay the video. For some of you who want to really get the gist of it. So we have our audio levels up now. Ladies and gentlemen, your attention to the screen. That's more reason to stay up and stay with us for lunch, because we want to make sure that you can actually get a quick view of this, and we'll have it displayed on the screen. But remember, I mentioned about the people element, and I mentioned about how we really need to make sure that we can actually have the people drive this agenda. So, to the CMA choir, I think you have a surprise for us into how we can actually live up to this. So, present to us the Uwezo Kipeo, which is actually your way of how you work in achieving this vision. Over to you.
Habari gani
Thank you. Thank you to the CMA choir, and all the best in your implementation strides. We appreciate. Ladies and gentlemen, we've come to the end of this program, and allow me to thank the CS for making time to be here. Of course, please pass our regards to His Excellency the President, also for spearheading and driving the Big Four agenda, even as corporations such as CMA have led the way in living up to this. Thank you to all our guests right up at the front. I should mention the board of CMA. I should mention to you, the industry players who are also partners with CMA in helping it achieve this vision. So ladies and gentlemen, just to give you direction for the next bit of the program, we're going to have a chief guest walk right to the staircase where he will be led by the team right at the front. And our colleagues in the media also will have a chance to interact with them right outside, just by the staircase. For us, we also invited to lunch, thanks to CMA. And of course, the networking session continues. So please don't feel rush to leave. Stay on at KICC. And of course, let the networking session continue and see how you're going to plug in and align. To our viewers who are tuned to us from home and of course from various places around the world, thank you for tuning in to Top in Business. We'll be coming to you live from the Kenyatta International Convention Center. It's at this very location where we'll be bringing to you the 1 p.m. news shortly, of course, with a highlight of what has inspired earlier on today, courtesy of this launch. My name is Laban Cliff. I want to bid you at home goodbye, and also the guests right at the front. So I think we'll all have to appreciate everyone who's tuned in and who will be following these proceedings on social media and on television. For one more round of applause, that will mark the end. So let's appreciate ourselves for being here and making time. Honorable CS, Asante Sana, it's over to you, and the team now will guide you out.
Leo ni furaha tufanye shangwe na